Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock, with news the IMF is painting a bleak global economic picture. But first, already 4% of American homeowners aren't making their mortgage payments, a proportion that is sure to grow fast. It was only 0.25% in early March. Customs data in China for March has come in with some surprises, mostly positive. Exports fell 6.5%, but that was much less than expected and much smaller than for January and February. And imports also fell less than expected, down less than 1%. In fact, imports from New Zealand surged in March compared with the prior 2 months. This data may be encouraging, but with China's export customers not buying, their overall situation will probably be worse from here. Still, China's infrastructure stimulus spending is ramping up fast. A record number of excavators were sold nationwide in March, far outpacing the growth in previous stimulus periods. The momentum seems strong as shovel-ready projects rolled out fast, and iron ore prices have turned higher again. Meanwhile, Australian business confidence has plunged to its lowest level ever, even worse than the 2008 GFC, as Australia braces for a recession of unprecedented speed and magnitude. New orders have collapsed, and that's according to the March update of the NAB Business Confidence Survey. Imagine what their April survey will show. Meanwhile, Australia's Treasury has forecast unemployment will double in the June quarter to 10%, and it would have gone to 15% if not for fiscal stimulus measures they've adopted. Equities are rising today on the basis that the virus spread may be slowing. The S&P 500 is up 3% so far in the current session. But the IMF is saying the economic effects of closed borders will linger far longer than investors expect, and the world will suffer a steep recession, with the global economy falling 3% in 2020, with the only region managing any growth in 2020 being the emerging and developing Asian economies, led by India and China. They see a massive 7.2% contraction in New Zealand this year, worse than for the US at 5.9%, worse than Australia at 6.7%, and worse than Japan at 5.2%. Essentially, the IMF is saying New Zealand will be one of the worst hit nations economically, even if we escape most of the virus impacts directly. They see a 9.2% unemployment this year here, still 6.8% jobless next year. But the economic bounce back will come with economic growth of 5.9% in 2021 over 2020. But still, that's leaving us in the hole, lower by 1.3% going into 2022. It's going to be a long slog. The US Treasury 10-year yield is holding at just on 0.74%, and gold is up strongly again today, up another $19 to $1,737 an ounce. And US oil prices are a lot softer today at just over $20.50 a barrel, a drop of $2.50. The Brent benchmark has dropped hard as well at just under $29.50 a barrel. The OPEC Russia output cut hasn't had any impact at all. There is still no demand. And the Kiwi dollar will open today marginally softer at 60.9 US cents. On the cross rates, we're much lower at 94.7 Australian cents with a drop of 0.75 cent, while against the euro we're down almost 0.5 cent to 55.5 euro cents. That means the trade-weighted index will start today at 66.7. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.